I'm Joanna Simpson here at FundForum International, and joining me now is Will Main, Senior Director at Broadridge. Thank you very much for joining me today.
Thank you.
And what are the big mega trends shaping global investor demand, and do any span the retail and institutional divide?
Yeah, there's a couple. The first I draw on really is the role of technology. Quite a broad topic, but I'll probably pick up three areas. The first is just like the innovation going on in vehicles. The ETF phenomena continues, and I think is really changing. It really is an innovation in a wrapper and not a product. I think it's perceived as being associated with passive strategies, but that's really just because that's the most common product within it. And we just see an increasingly diverse set of products within that, ranging from through to fixed income, active strategies, but also, as we've seen in this conference, like thematics as well within that piece. We also see innovation in the way that managers can systematically access certain exposures. So spaces that before were very much the realm of the active manager, we see really the smart beta space, the factor space, the systematic exposures to risk premia at a lower cost than was perceived before, and maybe with more transparency. And I guess the third area is as beta is getting smarter, alpha to some degree has to get a bit smarter as well. So we see increasing focus on data science, increasing focus on AI and big data, and how that can start to pull out and extract new sources of persistent alpha. There's a battle for talent going on really between technology and with finance companies around who can get the best data scientists. And it's something we're doing ourselves at Broadridge in using machine learning techniques in the advisor network space in the US, identifying which advisors are using models and which ones aren't. So that's the sort of tech space. And the second area I want to talk about is ESG really, because that is another mega theme that permeates both sides of the aisle. And there's a couple of points I'd raise. The first is that it's this, just from a financial perspective, incorporation of some of these risks, climate change, might just mean that these companies are better prepared for the future and will offer more persistent financial performance versus companies that don't. The second, I think, really is a societal change. We see increasing wealth amongst millennials. This is more important. Increasing wealth amongst women, and these are features that are reflecting a broad societal appreciation of wanting their money to do good. And I think you see those two things coming together, so this demand effect, at the same time as asset managers are thinking themselves and responding. So there's a lot of marketing efforts that are coming out, a lot of new product. I think those two come together to make a flurry of activity in the ESG space. And I think recognizing the importance of ESG in the future is why we've partnered with MSCI to get their ESG metrics on our platform. Because although I think this is still an early environment and investors are still learning how to use ESG criteria for selections, we think it is really going to be the future and it's going to grow in ground. So we're prepared for that.
And how much does that divide really exist anymore?
Between institutional and retail, it's a blurry space, to be honest. So you see, if we think about institutional as being typically large, fewer opportunities, but then bigger ones at that, and also a selection criteria around technicals. Let's talk about performance and risk and attribution analysis. And we see some of those themes starting to emerge in the retail space. So, and it really is a global phenomenon. We see in the US market the increasing use of home office and models within the broker community. Over in Europe, we hear about FSUs, so fund selection units, playing an increasingly important role within private banks, and sub-advisory and other sort of quasi-institutional channels emerging. And that's why at Broadridge we increasingly have product that just spans both sides of retail and institutional, because we find that line very tricky to draw.
And what are the implications for asset managers?
I think there's a few. I think that the first I'd point out is investing in an institutional quality sales function. And what I really mean by that is sales professionals that are comfortable with a very rich investment dialogue, can get to grip with the technicals and explain around the way that different products and solutions can fit within portfolios and what outcomes they're trying to perceive for investors. And also, I think with that institutional sales function, you see the role of product specialists increasing as well. A way of getting a voice into the investment function with also balancing the time of the portfolio managers themselves. The second, I would say, is get more familiar with partnerships. So you hear this preferred partnership, strategic partnership, whatever you want to describe it. But ultimately, that's as an asset manager, looking quite holistically across your business to think, how as you, as my distributor, can we work together better? And it might be training programs, it might be co-marketing, it might be really actually activities outside of just the investment function. And I think we're going to see more and more of that as well. And that's also on the institutional side. Big institutions want to partner, you see co-investment, sharing of IP, and I think that's a really important thing.
Will Main from Broadridge, thank you very much for your time.
Thank you.